Whether you're a woman or whether you're a man, sometimes you got to take a stand. Just because you think you can, you got to run, you got to run. Whether you're a woman or whether you're a man, sometimes you got to take a stand. Just because you think you can, you got to run, you got to run, run. Trying against the odds, you're in a trance. Say, who did you...
Yo, everybody, playing against the odds. Listening to Buffy St. Marie there. Hey, our next speaker is Tim Laronde, who will be speaking about the importance of building credit, which I love. And Tim is the Associate Vice President of Trust Services at Peace Hills Trust Company. And Tim, I thank you as Peace Hills Trust. When I first started out to get my first opportunity with banking and moving forward in my life, it was Peace Hills Trust.
Oh, very cool. That's good to hear.
Yeah. So everybody enjoy Tim, and I'll see you after, Tim.
Okay, thanks for the intro. Okay, just give me 1 second here as I share the screen and get the presentation up. There we go. So the topic today, welcome everyone. Anine, Tim Laronde, Andujam Nakas, Nibising, Ndunjaba. That's my first attempt at speaking my language, which I never knew about growing up. So thank you for your patience on that. My name is Tim Laronde, as Adam mentioned. I am a member of Nipissing First Nation, and I am proud to be part of this youth event. Today we're going to be talking about, here we are. So as I mentioned, I'm from Nipissing First Nation. Unfortunately, we can't be there in person to join everyone, but I am working out of my home. I live in the Toronto area, so I do want to acknowledge that I am working right now on the traditional territory of the Mississaugas the Credit First Nation, and I thank them for their hospitalities as they are the original caretakers of this land. I've been working in the financial services industry for more than 25 years. I've done some community work for my own community. In 2013, I became a community trustee with the Nipissing 23 Boundary Claim Trust, and that was a large land claim settlement that our community had received from a boundary dispute. And I did my 2 terms from 2013 to 2019. And the reason I wanted to do that, it was an opportunity for me to give back to a community and to learn more about a community and a culture that I never knew about growing up because of my grandfather, who had to voluntarily enfranchise when my uncles wanted to join the war effort in the Second World War. So I claim my status back in the 1980s under Bill C-31. So since 2013, I've been a lot more active in learning about my culture and doing things I can to help share knowledge and give back to the community like days like today. In 2019, last June, I became a director of the Anishinaabe Health Foundation in Toronto, and that is an organization that raises money for the new Anishinaabe Health Toronto Center that's going to be breaking ground soon. What it's doing is it's taking 3 older buildings and consolidating into one new state-of-the-art building down near the waterfront, and it's going to be an opportunity for the 70,000 Indigenous people in Toronto. It'll give them access to traditional healing and First Nations healthcare because we've got a lot of members that live not on the reserve, but in Toronto itself. And just this past summer, I was appointed director of the Canadian Council for Aboriginal Business. And that's an association that promotes empowering businesses and encouraging Indigenous businesses to gain access to more services in the Canadian economy, giving them a fair competition and better chances. So, and one of the highlights of my last couple of years was I was very fortunate to attend the Harvard Business School program offered through AFOA, which is the Aboriginal Financial Officers Association. The course was called Leading People in Investing to Build Sustainable Communities, and it gave me an opportunity to travel to Harvard for a week, and with 40 other First Nations people in Canada. There was 40 other First Nations people from the US and even 2 from Australia. So it was a great week, and it's something I'll remember for a long time. So what are we going to learn today? Well, today is really, it's about credit reporting, credit scores, and why this is important, because this knowledge will help you manage your money and improve your financial well-being. So there'll be time to ask questions. If you want to ask questions, you can use the chat feature, which I'm sure people are using, but or you can use the thumbs up or whatever you like, but it's how many people out there really know what their credit score is, and really how many people have actually reviewed their own credit report in the last year. So basically what we're going to talk about today is what is a credit report and what are credit scores, what information is included in the credit report, how do the lenders and the financial institutions use the credit report and credit scores to establish risk and to decide if they should be lending money to you or not, and why it's important to check your credit report at least once a year. And then, of course, how do you obtain, or how do you get your credit report and your credit score? So hopefully you'll take away some of this information today and recognize that this is an important thing. As you grow older, you want to make sure that you've got a good credit rating. So we're going to start off with just a couple of questions, and I kind of wish we were there. I was there in person and we could do this because it would be a lot easier, but this is some of the things that a credit report talks about. So what does a credit report include? So if you feel answer A, it just talks about your credit cards and your loans, you would pick A. Does it include anything about your mobile phone account? Does your credit report have access to your Facebook posts? Which could be good or bad. Or your mortgage? Or does it include all of the above? So the answer is more than one answer is correct here. So the next slide will show you the answer. And the answer is A, B, and D. So it will look at your credit cards and your loans. It'll access your mobile phone in terms of how you're making payments and if you're on time. And for those of you who own houses, it'll talk about your mortgage as well, if you have a mortgage. Here's a true or false question. When it comes to credit scores, is it better to have a lower number or a higher number? The answer is it's a higher credit score. And I'm going to get into a little bit more detail on the credit score numbers and how that's works. So the higher the number, the better the score, which means to financial institutions, you are a lower risk, and that will make them a lot more comfortable in terms of lending money to you. So the third question is, if you have missed payments on your credit card, how long do they stay on your report? Is it for 1 year? Is it for 6 years? Or does it stay on forever? Or is it only as long as the creditor wants them to stay on the report? The answer is for up to 6 years. And that will depend a little bit on the province you live in as well. And I'll get into more details about that very shortly. Another common question, true or false? If you want to build a good credit history, should you go out there and apply for every type of credit card you can get your hands on? You think that's a good strategy? Well, the answer to this question is false. If you want to build a good credit history, you need to use different types of credit history, and it has to be over time. And it's not really a best practice to be applying for too many sources of credit within a short period of time. So the next question is true or false? Do you have to pay in order to get your credit report from a credit bureau? Well, this is kind of a trick question, because the answer is both true and false. And I'll get into details more in the presentations. You don't have to pay when you order your credit report by mail or phone. If you order your credit report using one of these methods, you'll get it by mail. You may have to pay for your credit report instantly online, and it's free from TransUnion once a month, and you usually have to pay to get your credit score. So I mentioned TransUnion, and I'll talk about Equifax, which are two of the credit bureau reporting agencies. So now we'll go into a little bit more detail on the credit report and basically credit score basics. So what is a credit report? Well, essentially a credit report is really just a summary of your credit history. And as I mentioned earlier, it's compiled by credit bureaus. And there's two of them that are used in Canada. One is called Equifax, and the other is called TransUnion. And basically, it's a summary of your credit information, and the information has been submitted by the lenders or other companies, such as the banks, the credit card companies, and the telecommunication companies. So different types of credit. Well, what does that really mean? Well, this could be credit cards. This could be store credit cards. This would be personal loans. It could be a car loan. Student loans are also reportable on your credit report. Mortgages and lines of credit. So really, it's your record of borrowing money. It also tells you if you've applied for credit in the last little while. So it's a lot of detailed information in a very short format that helps lenders make decisions with respect to lending money in terms of determining if you're a good credit risk. So what's included in the credit report? Well, it'll tell you when you open each of the account, and by each of the account, that could be your bank account, it could be a credit card, it could be a mobile phone account, it could be a store account, it could be anything like that, a gas card. It'll indicate how much you owe and whether you're making your payments on time or if you've missed some payments. And it also indicates whether you go over your credit limit. It'll also include some personal information, which I'll cover in a later section. But it also, with respect to mobile phone accounts, it'll talk about anything regarding your checking or savings accounts, any accounts that have been closed for cause. And for cause basically means that if you didn't operate under the correct account agreement. So in other words, there was fraud or there was an NSF check written, which is a non-sufficient funds check. This will establish your credit, be established on your credit history. So it's important to maintain a good banking practices. It'll also include anything but mortgages or other, if the mortgage lender sends information to the credit report. So what does it do with this information? Well, what the credit bureau does, it compiles this information and it creates what's called a rating system. And the rating system comes out and it gives you a score. So the score is basically a number that rates how well or how poorly you use credit. And it's based on the information in the credit report. So you get points. You get points for using credit responsibly. For example, when you make your payments in full or on time. You lose points if you don't manage your credit in a responsible way. For example, by making late payments or going over your credit limit or not making payments at all. So they have this proprietary system for determining credit scores. And in Canada, the credit score can range anywhere from 300, which is poor, to 900, which is excellent. So I know you probably can't see this, and it's a little bit of a busy slide, but really what I did here was I took a screenshot of an Equifax credit report to kind of give everyone an example what it really looks like in terms of the scoring summary. So there's some interesting information on here because it's highlighted here that 750 is a very good score. And let's see here, interseason chat. So if you've got a range between 300 and 560, it's considered poor, and about 4% of the population have that. 560 to 659, it's considered fair. and about 10% of the population. 660 to 724 is considered good, and that represents about 15% of the population. And the example here showing 750, that's a very good range, and 14%. And it's interesting to note that if your credit score is 760 or higher, well, you're in there with 57% of the Canadian population. So that's a good score. Banks will feel very comfortable in lending you money in terms of one of the other variables, one of the many variables that they'll look at when deciding credit risk and loan assessment. The next slide is just another detailed slide from Equifax. And really, it's just more it gives you percentages of delinquency rates based on your credit score. So you can see, it's a little difficult to see, but the idea here is that the higher the score, so 750, they've done research that shows about only 1% of people become delinquent on loans. So from a banker's point of view, they're looking, well, that's a good credit risk, because if I extend credit to this individual who has a 750 credit score, there's only really a 1% chance based on these averages that they will be a poor risk and not pay the money back. So this is why it's important for banks to look at this information, and it's equally important for you as individuals to make sure that your credit score stays as high as you possibly can. The next slide is just as I mentioned earlier, there's two firms, Equifax and TransUnion. Their systems are similar, but their numbering is a little bit different. So here's an example of a screenshot from TransUnion, which shows a credit score of 834. And then you can see on the bottom that falls into the purple range, which says it's very good. And you'll notice that a score of 750 under TransUnion will only show as good on TransUnion, but very good on Equifax. So it's basically the same concept, but it's just a different scoring system. But it is interesting to point out that if you are getting your credit score or your credit bureau, and lenders are talking to you about that, make sure you know which one they're talking about. Is it going to be a TransUnion score or an Equifax? And what happens is banks will probably just use one or the other. They usually don't use both, because there's a cost to the banks for applying for the service from the credit reporting agencies. So really what you're looking at here is the score, the percentage ranking, and the creditworthiness rating. So a good example, as I mentioned, 700 is only fair on the TransUnion report, but it shows as good on the other report. So a question is, what if you have a score of 500? Is that a good score on either TransUnion or Equifax? The answer is it's false. So 500 would be poor for both Equifax and TransUnion, and that would really limit your ability to obtain credit from a financial institution. So the next slide I just want to talk to you about is, well, how is the credit report and how is the credit score used? Well, this is where it gets a little bit more interesting, because if you're, the idea here is really to determine, are you a high or a low risk for credit? And that's what the bankers will do. They'll make that assessment by looking at your credit score. Well, how does that affect you? Well, if you're a low risk, you could get an interest rate that may be a little bit more attractive as compared to someone with a low credit score, which means they are higher risk. So essentially what this means is that the interest rate that banks charge is determined by the level of risk. High risk, higher rates. Low risk, lower rates. So this is why it's important to maintain a good credit rating, because it'll help you with the rate you're going to get on the loan. It'll also help you with the credit limit. So if the bank's comfortable lending you a little bit more money, instead of maybe if you went in for 5,000, they felt you had a good score, they may offer you more credit because they've seen that you manage your credit very well. This also, credit scores are used by landlords, and if you're looking at renting, so you would a landlord looking at a credit bureau, if they see a low risk, a low rating, that means you're a higher risk. They may not want to rent to you because maybe you're not making your payments on time. So that's something that's very important to have. Businesses, when you're applying for jobs, sometimes, especially if you're in an industry that you're managing cash, it's important that your credit rating is acceptable or low, have a high credit rating, because it shows that you've managed money responsibly. So this would be something that employers could use as well. And in some provinces, it also determines how much you pay for insurance. I don't think that happens in Ontario, but I can't speak for the other provinces. So what is some of the personal information that they're going to be asking you? This is what you have to supply when you apply for a loan at a financial institution. And this information then gets moved over to the credit bureau reporting agencies. And this basically breaks down the following. So they want to know your name, your address, phone numbers. That's important. If you have, in the old days, we used to have landlines, and I think everyone has cell phones now. So there could be two phone numbers. It could be your work phone number as well. They want to know your date of birth, your social insurance number, and your employment. They'll also may want to know current and previous employers if you haven't been employed for a very long period of time. What I've seen in the past is a lot of times they'll be looking at if you've been employed less than 3 years, they would want to know where you were employed before that. If you're just starting out in the workforce, then you're either a student or something before that. But it's a way they can gather a history in terms of what you've been doing for the last few years. The second part of the credit report, we'll talk about the credit history. So what this does, this will record all your credit accounts and all your transactions. It'll include mobile phone accounts, any of your banking information that was closed for cause, as I mentioned earlier, if that's for money owing or fraud or NSF checks. It'll also disclose public records such as bankruptcy or legal judgments, and registered items such as a lien on a car or a house. When you go for a car loan, the bank will take security and they'll put a lien or a charge on your vehicle, which means that you can't sell that vehicle until your loan is paid off. And then once your debt is paid off, it's up to the creditor then to discharge that lien on your vehicle, and then it's available for sale. The debt, any debts that were sent to collection agency. So basically what that means is that if you owed money to let's say a credit card company, let's say it was $500, let's use a mobile phone. Let's say it was $500 for a mobile phone company, and you decided not to pay the bill. Well, what happens is the mobile phone company doesn't have the time to go through and collect these smaller debts. So this is where collection agencies come in. So what they basically do is they will take that debt and they will literally sell it to the collection agency. And then the collection agency will buy that debt for maybe cents on the dollar. So in other words, if it's a $500 loan, they may say to the creditor, okay, we'll take that debt off your hand for 50 cents on the dollar, which means the mobile phone company gets $250, and they're saying, okay, at least I got that. And now the debt is assumed by the collection agencies. And the collection agencies now will be after you to pay that debt. And they'll try to get as much as they can, but they'll try to get at least the $250 to make up what they paid for at the bank. So there's also, there'll be credit checks by lenders. So anytime you've applied for credit, that will show on your credit history. And there'll also be something called consumer statement, fraud alerts, or identity verification alerts. And I'll talk a little bit about those in a second. I know you won't be able to see this. It's a very small print, so I do apologize. But it's basically a snapshot or a screenshot of what a history section on an Equifax credit report looks like. So basically, it shows in here that there's 3 different loans. You can see by the BQE Live, and it just talks about the payment history. And it says there's been 2 payments, periods past due 0 times, and so on. So this is the type of information that gets compiled. And once this information is compiled with the credit reporting agency, that's what generates your score. So you can see if you have a lot of credit and you're handling it well, that will give you a higher score. If you have a lot of credit and you're not handling it well, that will give you a lower score. It's interesting to note that the credit report only really contains records of your failure to pay bills, not a record when you've paid them on time. So it's kind of a punitive document, but it's there for a purpose because it's really meant as a summary for a lender to make a decision on whether to extend credit to you. So I get this question quite often, and it happens, I think, to lots of people, but it's an opportunity, I think. So they say, how long does the information stay in your credit report? So if you've been through a tough experience and you had trouble making payments, well, negative information about your credit cards and loans, they will stay generally on your report for about 6 years. Credit checks by lenders, this is the time that every time you apply for a loan, they will stay on the report for 3 years with Equifax and 6 years with TransUnion. And any bankruptcy would be 6 or 7 years. But this information usually varies by the province or territory you're living in. So how do you calculate your credit score? Well, this is something that you and I can't do. This is something that the credit bureau reporting agencies do. They have these formulas that provide certain weighting to certain things like the payment history, your use of available credit, how long you've been accessing credit and using credit, how many credit checks you've had, how many inquiries you've had, and the types of credit. Are you diversifying? Are you just going after credit cards? Are you just going after store credit cards? Or do you have a car loan on there? Or do you have a mortgage? Or do you have a student loan? So these are some of the things that will compile your credit score, calculate it, and it'll generate that number for you. So I talked a little bit about payment history. And payment history, can it damage your credit score? Well, how does it do it? Well, late payments are not good. Missed payments, debts sent to a collections agency, bankruptcy, or payments withheld because of a dispute. These are negative things, are called derogatory items that will show up on your credit report, and it will affect your credit score. So here's some tips. Always try to make your payments on time and in full. If you can't pay in full, at least pay the minimum amount. And in the world of working with bankers and creditors, communication is key. If you can't make the minimum payment, do not be afraid to contact the lender. They are people too. You may have certain circumstances that don't allow for you to make payments. Explain your situation, and sometimes they'll make special arrangements to help you pay off the debt. It's better to have that communication with the lender than avoid communication altogether. Because if you're avoiding communication altogether, the lenders are going to assume the worst, that you don't want to make the payments, and that will affect your credit score. Your use of available credit. So that basically means how much credit you have available to you. So if you use a large percentage of your available credit, it means you're at greater risk, which will generate a lower score. And conversely, if you use a lower percentage of your available credit, you will get a higher score. So I'm going to give you an example of and a best practice that the banks recommend for available credit. They like to use the guideline around 35% of your total available credit. So what does that mean? So let's say you have a credit card with a limit of $5,000 and you have a line of credit with a limit of $10,000. That means you have a total available credit of $15,000. If you multiply that amount by 35%, it's just over $5,200, about $5,250. So what that means is that if you kept your use of credit below the $5,250, that generally means that you're not overextending yourself and you're using your credit wisely. If you are closer to the top of the 15,000 and you're having trouble making payments, that just means that you're not managing your credit very well, and that will work against you in terms of your credit score. So some of the tips that the banks like to offer is say, keep an older account open, a bank account or even a credit card, because that'll show that you have a history of utilizing credit properly, and then use it from time to time just to keep it active. One thing that comes up quite often is you have joint bank accounts or a mortgage with your partner, a loan with your partner. that credit report and account history is reporting as well. And it's okay to have joint accounts, but you just need to ensure that the credit is in your name to show credit history. Usually what they do is they have a primary designate, and that is if it's a joint account, and that credit history reflects on that primary person. So although it's okay to have joint accounts, it's good to get into the practice of having your own credit as well, because that way you can establish your own credit history. So here's an example of a credit check. So again, it's this a little bit, it's a screenshot, I guess, from an Equifax. And what it does is that every time you apply for credit, the lender may do a credit check and ask the credit bureau for your credit report to see if you're a high or low risk. So the lender looks for things like missed payments or overuse of credit. And this is recorded as an inquiry on your credit report. And you can see here that there's 5 inquiries, and it gives you examples of the dates. So the credit checks, sometimes they're called hits. They may be considered hard or soft. So example, when you apply for a credit card or a loan, that's considered a hard hit. And that shows that will count towards your credit score. A soft hit is an example when you request your own credit report, or when businesses request your credit report to update your account record. They're usually not recorded to your credit history, and they don't have an impact on your rating. So if there's too many hard hits on your credit report, the lenders may conclude that you may be desperately seeking credit. They use the term credit seeker, and that means you're a higher risk. It means you're trying to live beyond your means without the ability to pay back the money you want to borrow. This can lower your credit score. So what are the tips the banks recommend? Just limit the number of credit applications you make within a short period of time. And only look for credit when you need it. Because the more inquiries you do, the more it's going to lower your credit score. Also, it's really good to diversify with a variety of types of credit. So having a cell phone, having a credit card or two, you have a line of credit, you have a car loan, those are good. But remember, keep it in balance and perspective, and try not to go overboard, because that can work against you. Next thing you know, all the income you're making is going off to pay debt, and you've got other priorities like food and lodging and housing and other things. So you want to make sure that you use it wisely and have good balance. So how do you improve your credit score? So let's say your credit score has been established. You say, you know what, I want to improve this over time, so that in a year or 2 or 3 years from now, I can apply for that car loan, or I can apply for a mortgage, and this will help me. Well, making the payments on time and in full. And if you can't make it in full, at least the minimum payment. And again, what I said earlier about communication being key, contact the lender right away. Try to keep that 35% rule in line as well. Try not to use no more than 35%. Keeping an older account open, that's very helpful, because it talks about your long-term credit history. Don't over-imply. Don't be a credit seeker. Really only go after credit when you need it. And it's always good to diversify with a mix of different credit products. So how do you check your credit report? This is important because it is available to you. And as I mentioned earlier, it's something that's important, and it's something you should check at least once a year. So what are you looking for? Well, the first thing you want to make sure is that they have the information accurate. Make sure there's no mistakes in any of your personal information, so your name, your address, your phone numbers, and so on. Make sure there's no errors in the credit card or loan accounts. That does happen from time to time. So it's important that you want to make sure that you're getting credit, no pun intended, for your good credit behavior on how you make your payments and so on. You also want to make sure that negative information isn't on there for too long, because that can impact your score as well. And here's one that we see happening quite a lot. It's accounts you didn't open. That could be a sign of identity theft, or maybe even just a mistaken identity. Someone has a similar name to you. So it's important that you keep this in mind, because your credit score is very important to you. It's something you work hard for, and you don't want someone stealing that and taking advantage of your identity to get credit for themselves. So how do you correct errors in your credit report? You can dispute the incorrect information with the credit reporting agency. You can't remove negative information because that's been supplied by the bank. But if it's not correct, you can fix it to avoid negative consequences. And then just follow the credit bureau's procedures. What you can also do is you can add what's called a consumer statement, which is basically a fraud alert. And this actually happened to me personally a couple of years ago when I was applying for a vehicle loan. I had found out that a bank, part of a number of cards were compromised. And one of their security measures is to notify and put a consumer alert or a consumer statement on my credit card so that if I applied for credit, they wanted to make sure it was me applying and not somebody else. So that was a good safety measure that the banks put on just to make sure that everything is fine. So this is an example of a fraud alert. This will come up from time to time, and as I mentioned, this would probably be on my credit bureau, is that, it's an alert. It tells the creditor or the lender to verify the consumer's identity and please contact the consumer at this number before extending credit. So it's just an example to make sure that it is you that's applying for credit and no one has taken advantage of your the credit rating that you've worked so hard to get. So how do you order or you obtain your credit report and your credit score? As I mentioned earlier in the quiz at the front, you can get your credit report by mail. You can get it by telephone and in person. It's free of charge. The ones online may cost you money depending on TransUnion or Equifax, and your credit score will usually cost you money. And the best way to find out what those costs are is this is just an example of the phone numbers, the toll-free numbers, if you wanted to call them, or you have the websites as well, and they will provide information and procedures on how to obtain your credit information to make sure that you've got your credit report is active. This is a little difficult to see, but basically it's just a screenshot again of the Equifax application form. It's just usually just a one-pager, and it just tells you, give us the personal information and your date of birth and your social insurance number, all these things. And this is something that they need to look up and obtain your credit report so they can provide that information to you. And just to be fair, there's the application form from TransUnion. So TransUnion is very similar. They're going to ask for personal information, address information, and employment information, and obviously your signature. So it's important to make sure that it's you doing it. So just a quick summary before I wrap up, and if there's we can take questions after that. So we talked in the first part about the summary of your credit history. Takeaways for everyone. Your credit score will show you how well you use your credit. And it's a 3-digit number between 300 and 900. And you always want to get a high number. The lenders will use that to determine if you're a high or low credit risks. And then we talked a little bit about how negative information will remain on your credit bureau for a fixed length of time. The next part we talked about was how to improve your credit score. Well, if you get into practice of making the payments on time or in full, or at least the minimum payment, that way the creditor knows that you're still out there and you're still trying to make, you still want to recognize that good relationship. And if you're having trouble making the payment, please contact a lender. That would be the best thing to do. That'd be my best advice I can give you. Again, try not to get into a position where you're using more than 35% of your available credit. Try to keep older accounts open and use them from time to time just to show there's a history there. Do not over apply, and then try to diversify your different types of with the mix of credit. And then there's some good best practices we talked about in part 3 of the presentation, which is basically try to get at least once a year, check your credit report. You can order that from the credit bureau. The key is looking for errors and possible identity fraud. And as I mentioned, it's ordered for free by mail or telephone. You may have to pay for if you order it online. And I said, if you want to get your credit score, you usually have to pay for that. So I just wanted to do an acknowledgement. A lot of this information is available at the Financial Consumer Agency of Canada, and they provided me with the bulk of this presentation, and they have their websites, and the presentation is really meant there for an education for all of us to if we have any questions. So that basically concludes my presentation. And what I can do now is I can open it up to questions. Let me just think. Oh, here we go. I can see the chat line now. So Michelle, oh, sorry, go ahead.
So Credit Karma for the youth, it's great. It's an app. You put it on your phone. It's free, and you get these annoying weekly emails to let you know if there's changes. So I use that because I'm, well, I'm just like over sociopathic about things like that. So, and then for Equifax, I believe there's a way to get free. I pay for my Equifax. I pay $20 a month to be notified if any offends or touches anything, but there is a way to get a free report. I think you can only pull it maybe every 90 days for free, but it's still an option to see if you have any, you know, things that you didn't even know you had, or a phone bill you forgot about, or anything like that.
Okay. Sorry, I think my chat wasn't on when I was doing my presentation. So I do see all the questions here now. So there's one question: has there ever been someone with a perfect score of 900? That's a really good one. I don't think I've ever seen one. Definitely not me, that's for sure. But I'm sure there are people out there with very high scores. I remember in my lending days at banks, I've seen a lot of scores in the 800s and the 850s. So it is possible. But I think that the general idea is if you're over that 750 and you're up in that area, that's important to stay there. So,
what is the worst score you've ever seen?
I have seen some in the 400s. I don't think I've ever seen a 300, but the 400s are tough because the person has to explain each item, and if it's really not an explainable, an acceptable answer, the bank's going to have a hard time justifying lending money to that individual. So it's tough. And the advice I gave to people who came into the banks and asked for credit that had high scores, I specifically said, what you need to do is you need to work on your credit history and you need to improve your credit score, because that's going to be there for a while. And so sometimes they'd come back, you know, maybe a year or a year and a half later, but I know it didn't help their immediate needs, but I think it brought to them a point, or brought to them attention that, hey, I got a problem here. I got to fix this, because it affects my reputation. It affects a lot of things I want to do in terms of starting out in life, in terms of buying a car or getting a credit card or getting a phone or getting a place to live. So these are very important things that they have to do. So.
Alicia asked, how much does your student loan affect your credit score?
That's a really good question. It's on there much like it would be any other loan. So the important thing with the student loans is that you make the payments, and depending on the situations, keep everything current. And as I mentioned in the presentation, the irony of the credit bureau report, it doesn't report positive information, it reports negative information. So the minute you are late, or if you're consistently late, that will show up on your credit bureau report, and it will have a negative impact on you trying to get credit in the future. If you do get credit, it may be more expensive. You may have to pay higher rates, and then sometimes you'll have to go to these other places where the rates are just astronomical, and don't recommend those at all. So.
Yeah, another thing too, if anybody has bad credit, a good way to build it would be the prepaid, like the credit cards where you give what's it called, a deposit. Because I actually was one of those people when I was 18 that should never have had a credit card, especially for Zellers. I don't know why I spent so much money there, but I had to rebuild my credit from that, which was interesting when I was about 21. So yeah, it's definitely, it takes a while to build up, but I highly recommend it, as does Tim, because it does reflect who you are as a person. Like you are judged when you come in with that low score, and it doesn't matter if you're like, my dog died, no one cares. They just want to make sure that you're not going to default on them.
Yeah. I've been working on a proposal just recently where very successful business person and you know, operating a successful business on a reserve. And as I finished with the application process, he just made a comment. He said, there might be a couple things in my credit bureau. I said, okay. I said, as long as they're explainable. And there were minor things. It was like $150 for a phone dispute. And he had other things that had gone to collection previously. And when I submitted the application, the VP credit kind of brought that up, said, you know, what's happening here? Maybe he's busy. Maybe he has people doing this and they weren't following up. And that happens sometimes. He's a very busy guy and he runs a very big business. So I just took the time to say, just be aware of this, because, you know, we're still going to go forward because we still feel that it's a very good loan to do. But at the end of the day, this is just kind of a minor blemish, but it certainly could have been avoidable. And it didn't really affect the amount because it was small, and it was he had other examples where we had good credit history. So the one or two things may not be impactful, but I think for the youth, when you're starting out, if it's something that you can control and something that you can stay on top of, it'll only prove beneficial for you down the road. When it comes that time when you want to buy your first car, or you want to get a mortgage or a loan or something like that.
Yeah, I like the whole thing, even with having minor things. I remember I used to work at a gym as a member. I was the manager for a while, but then a member coordinator. And a lot of the issues, gyms will put you in default. So if you don't physically go in and cancel them, a lot of gyms have had many lawsuits. So just be very careful of things you sign up for, even if it is just the gym membership, or it's a subscription box of something and you don't want it anymore, or I don't know, Avon or whatever you cool cats are doing nowadays. But whatever it is, just be cognizant of what you're doing, because it will affect you. Like, even if you don't want it, you need to physically go and cancel it.
And on that same point, Michelle, is a good one. I gave an example in the presentation of when let's say you finally pay off a car loan over 4 years or 5 years. Well, the car loan, the creditor has the obligation to discharge that lien. So it shows that the car has now been paid and you outright own it. But if a lot of times they forget or it's missed, and if you don't check your credit report and you go to sell your car or trade it in, 2 or 3 years later, it'll still show that there's a lien against your car, and then you got to go through the whole process of saying, hey, wait a minute, I paid that off 2 years ago. Why is it still showing? So it just complicates things, and it's really unnecessary. But it does happen from time to time.
Another thing, maybe you could talk about, being aware of co-signing with other people on loans and the drawbacks of that. I don't think a lot of people really understand the ramifications.
Yeah, I did touch upon it briefly, but it's a really good point, Michelle. I'll expand a little bit, and especially for for younger people who may have a parent or a guardian or someone older than them co-signing a loan. Yes, that's good because it helps you get that credit you need to get it going. But what's really happening there is that since you are not the original primary lender, credit person at the time, all the credit report goes really to the person who's co-signing the loan. A lot of it doesn't go to you. So a lot of it doesn't really build your credit. It'll show that you're a supplementary card holder, but that doesn't really impact your score, because the credit bureau reporting agencies realize that it's the person with the larger net worth that's really taking more of the risk here. And the loan was really given to that person based on their credit history. So it is important that you try to go off on your own sometime and get a card based on your own credit history, or establish your own credit history, because then now you're starting to build your own credit score, and that'll happen over time. And as you responsibly use credit, that will always improve as you get older, as long as you keep making the payments, and will be very helpful. Okay, there's a question here from Alicia. Have you any experience with the ministerial loan guarantee application? Looking to buy a house, however, my credit score is lower. Alicia, no, I unfortunately don't have any experience with that. I'm familiar with the program, yes, but I do not have any credit. Maybe what I'll do, Michelle, I'll take that question away and I'll find out for you, and I can get back to you if that's okay.
Yeah, that's fine with me. I'll send it off to Lisa.
We're actually, you can pass it on
now, so we're kind of BFF.
Yeah.
I'm gonna get matching tattoos. No, I'm just kidding.
And,
Okay.
And
Kenzie
asked the question, how long have you been working in this industry? Oh my gosh, someone's trying to find my age. I've been working in this industry for a while. I've been in the banking. Most of my banking experience has been in commercial banking. I had very little involved in retail, but it's at least 20 years. And I'm saying that just because I I don't want to give my age away. But anyways,
No,
I've
I'm much
been doing
older.
it.
You must have started when you were 10. That's so
Oh,
weird.
thank you, Michelle. Thank you so much.
Well, we've also
Um,
got to wrap up, and if I could
okay,
bring the lovely Adam, I don't even know if it's Adam. Are you here still, hon?
there he is.
Hell yeah, I'm
Adam's
checking
here.
it out.
There he
I hope
is.
you learned something, Adam. Was it helpful?
Of course, yeah. I
Thank
have
you.
a story with regards to my credit history. Is I always paid cash for everything, whether it was a car or a house or whatever. I lived to my means, and that was that. And then my manager or my business manager finally told me, and he said, Adam, we have to build your credit because it will allow me to kind of pay off your things a little bit better, because I'd hate to see you make $100,000 and you spend it immediately when you could put it to rest and pay it off over the years. And I was
Yeah,
like, whoa, so that's how it works.
yeah,
So I was lucky enough, because nobody would give me credit or I wasn't able to get it because I had no score, nothing. So I was able to find a car dealership in Los Angeles who, because they knew who I was, they said, we will lease you a car. And because they knew I wanted to get a credit card, and we'll, help you with your credit. And that's how my credit journey started.
cool. That's very cool.
And now I owe everybody.
Well, there's something in there. I don't know if I can take a quick second just to because most of my lending has been commercial lending, but I went to a community once where they were doing something what you said. They wanted to build a new band office, and I was in commercial. And what they're doing is they're setting aside money each year, and they figured after 10 years they'd have enough money to build the band office. So I said, listen, I got an idea for you. If you put a little bit down, I can lend you the money. You can build the band office now, and then you can pay it off over 10 years. So to them, it gave them instant band office. It gave them instant use of the money. The chief and council were happy with the idea, but it's just, it's, you never assume, right? I really think this should be taught in schools, to be honest with you, because I think it's an important part of learning as you get out on your own. But it's just, to me, it just, I never assume that people don't know anything about credit. So,
But also we have to start looking at who we bank with when it comes to communities, because Peace Hills Trust is a native bank on a reservation.
yeah,
So there are rules and regulations that you understand when it comes to dealing with our tribes. So I'm glad that you're doing that, because we have to keep that flow within ourselves.
yeah,
And looking at your history of your education to where you've gotten, it's cool the youth get to see that you've climbed a ladder and you haven't stopped. You're
thank you.
still continuing to get these different positions,
Yeah,
and you're still learning, and
yeah,
you're still guiding. Like, there's so much.
yeah.
And thank you for not stopping and
Oh,
just,
well, I appreciate that.
giving us your knowledge is so important, man. Keep it
Thanks, Adam.
up.
I appreciate those kind words. Thank you so much.
Yeah, dude. All
And
right.
just a quick thing. Yes, the thing about, thank you for mentioning Peace Hills Trust. They are owned by Samson Cree Nation out of Alberta, and they have a lot of experience lending with First Nations. So they do understand First Nations businesses and First Nation clients. So it is important for our people as well. So thank you for that.
Yeah, and there's other avenues too that banks can help certain communities in regards to pointing the direction of where to get money and how, and
That's
work
right.
through you. And
Yeah.
that's what a lot of people don't know. It's like, we have people who are in position
I think
to
we need to
help out.
like, how they have the presidential debate. I think we need to have all the big banks next year, and I will moderate it. And Adam will be there next year because he's forced into hosting us again next year. So we are going to do this, and we're going to have everybody,
like
and
it.
we're going to have him in a judge robe. We are going to do this properly.
I like
Sounds
it.
good.
All right.
Okay.
Well,
Love you.
everybody, Thank you
No, before
again.
you wrap it up, Adam, don't wrap it up. I have to just say something before you do. So, Tim, thank you so much. Next
Thank
up, I know a lot of people are exhausted. I am exhausted. I'm on Eastern time, so this is like my tea and bedtime. But we have another presentation coming up. We will be giving out the survey there. When you fill out the survey, you get to win the Apple Watch if you win, if your name's drawn. But if you're not there, you don't get the link. Well, guess what? You don't get it. So the next one is going to be amazing. It's Dr. Donna Odegaard. She is from Australia. She's Aboriginal. She is a serial entrepreneur. She is very successful, amazing, owns Aboriginal broadcasting in Australia, Aboriginal tourism in Australia. So I can assure you it's going to be amazing. And she looks like Wonder Woman. So you guys should be on there.
Awesome. All right. Thanks, everybody. Let's have a 30-minute break. See you in a little while.
Thanks, Adam. Thanks,
Okay.
Michelle.
Later, dude.
On duty to reclaim and intervene. You can call me a bitch, I'm feminist, I don't care. I'm too focused on my own, with my hands in the air. Unless you are an ally, keep opinions over there. Cause I do what I want, so kiss my Bannock derriere. For women, by women, 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 ride or die woman, stay fly and hold us up high.